Hello everyone, welcome to Breakdown and NQ. I don't usually trade any other pair other than EU. That's why you can see that most of the stuff that I explain in CPI, I explain it on the Euro, Dollar, or EU because that's literally the only pair I trade, right? Now, some of you have been requesting breakdowns on other pairs like NQ, Gold, or Bitcoin, but there are two problems with that, right? Let me explain. The first problem is that with CPI, my goal and aim is to explain each and every one of these concepts in the most logical way I possibly can, right? So that you guys can easily replicate them consistently in the live markets without a problem, right? I don't want to teach you something that is cherry picked, right? Which only works one time, and then when you actually go into the live markets, you aren't able to properly replicate it, right? That's why I make sure to explain only the things that have made me profitable, right? And that you can use in the real markets, right? And I want to explain only the things to you that I've got expertise in, right? That I have experience with. Now, EU is like the one and only pair that I trade, right? I know all of its in and outs, right? And that's because I wanted to be a specialist in EU and not a generalist, because I know that a specialist outclasses a generalist every single time. Now, the way how I've came to the conclusion to only trade a single pair and only EU as another whole story in itself, and I'll explain it to you someday. But the summary is that I'm a specialist in EU and I explain these concepts to you on EU because that's where can explain it to you the most accurately and precisely and in the most refined way possible, right? Because I can consistently replicate these concepts on EU every single day, and if I teach you these exact concepts and the same manner that I use them, you would also be able to do that without a problem, right? You would also be able to do that. That's why I only teach you on EU. The second problem is that I don't trade these other pairs, right? So there's nothing for me to break down for you, right? Because I haven't taken any trades or analyzed it, right? I don't want to explain some hindsight charts to you, right? I want to explain my actual thought process on trades that I've actually taken. That's why you only see the EU breakdowns, right? Because they're more authentic and realistic because I actually have executed those trades, right? And I record these videos right away after the trade is done, and I explain literally every single aspect of that trade to you and the whole thought process to you, so that you can thoroughly understand it, the ins and outs of that trade and why did I actually took that trade, right? There's the two main reason why I can't break down these other pairs. And because first of all, I want to teach you on a pair that I've got the most experience and expertise in, which is EU. The second reason is that I don't trade these pairs, right? So there's nothing for me to break down for you. I could easily explain some hindsight charts too, but I don't want that, right? I only want to explain to you on EU on trades that I've actually executed and that I've actually taken, right? And that I've actually gone ahead and thought about it, right? And that's why you're only seeing the EU breakdowns. Now, I do watch the higher time frames of these other pairs, like the weekly or the monthly time frame, but really rarely I ever take intraday trades on them, right? But since you guys have been asking a lot recently, that's why this week I decided to watch the NQ charts to find any trades, right? And I found this trade right here, which I executed. So in this breakdown, I'm going to break down every single aspect of this particular trade, right? Why I took it, what was the reason behind my stop loss, entries, and targets, right? So let's go ahead. Now, before we start, just remember and make sure to write this down. That the stuff that I'm explaining here works on literally everything, right? It doesn't matter if it's stocks, commodities, crypto, or forex. It works on all of them, right? All these market moves through the same logical frameworks and algorithms, right? So remember that all of this can be replicated on any single pair that you like. Now, just because I'm explaining to you on EU doesn't mean that it only works on EU and doesn't work on other pairs, right? It's just that I have the most experience with EU, and that's why you can replicate these exact concept on any other pair, any other time frame, right? So remember that. You should also, in the same way, become a specialist in a particular pair and stick to that for the rest of your life, right? It doesn't have to be EU just because I traded. It could be any other single pair from any single market, right? But just make sure you stick to it, right? Now, I'll explain these mindset and psychological stuff in CPI too, right? We've got a lot to uncover about these topics, and it's actually mindset stuff like these which really improves our understanding about the markets and even about ourselves, right? It truly changes our perspective about life, right? And I'm not even exaggerating, it's true, and you'd see that yourself. All right, let's get back to the breakdown and let me explain my thought process to you. So we're going to start off with the weekly time frame and we're going to see what we got here. Now, if you remember the high time frame case study I made on EU about a month ago, then you would remember that we had a monthly CRT and NQ, which made price expand lower, and then we took out the monthly CRT low, right? Now, the factors that led to that monthly CRT were the fact that we were at the all-time high, right? So we had to form a retracement profile to rebalance the markets and rebalance the dealing range. Now what you can see right here is that after that move lower, we finally rebalanced this whole dealing range and we tested a discount key level right here in the form of this order block. You can see this order block right. You can see this order block right here. It's in the discount region of this dealing range. And what happened is that after this monthly CRT low was taken, with that we also tested this discount key level and then the candle closed above the key level, right? What you can see right here is that this candle ended and closed just above this order block before testing it, which means that this candle has now generated liquidity above this discount key level. So when the next candle opens, we can expect it to test the discount key level, and then we can potentially trade this candle as a CRT and target its high, which would be our candle range, right? That's the whole premise for CRT. So when the next candle opened right here, you can see it went down, past the other candle, tested the key level, and then it closed inside the CRT and closed above the key level, which suggests bullish momentum, right? Now for the rest of the week and the other weeks, your target would have been the opposing end of the range, which is the CRT high, and you can see price exactly did that and it expanded higher to take out the CRT high. Now what you can see right here is that we formed this new bullish FEG right here. So when this new weekly candle opened, I was expecting this FEG to be tested and I wanted to look for longs off of this FEG, right? My thought process was to expect this FEG to be tested and then look for longs off of this FEG. So then I went down to the daily time frame to refine that thought process even more and refine my drawn liquidity so that I could finally go down to the 4 hour time frame to position myself in a CRT, right? So on the daily time frame, you can see that we've got this price action right here. What you can see is that on Monday, we purged below this low, which is the weekly FEG, and we tested the FEG, right? So I started looking for a CRT on the 4 hour time frame. But what happened on the 4 hour is that price never purged the CRT, which I was looking for it to be purged, right? So I skipped Monday, and then today I had the same expectation. I wanted to see this Monday's candle low to be taken as a candle range, and after that, I wanted to see higher prices, right? So initial expectation was bearish until this Monday low is taken and then bias is going to turn into bullish, right? Now we're going to go down to the 4 hour to see how I position myself in a 4 hour CRT. So right here on the 4 hour, you can see this is the 4 hour candle on Monday that purged into the weekly FEG uh, from which I was looking for higher prices, right? Now on Monday, I took this candle as a CRT and wanted to look for longs off of it. But what happened is that price never took out this candle's low on Monday. So I skipped Monday, right? And then even on Tuesday, my expectation was first this Monday's low to be taken as a CRT, right? And then I wanted to see higher prices from here. So the first half of the day on Tuesday, I kept looking for this low to be taken and I took this Monday's low as a short-term intraday down liquidity for myself, right? And after that short-term down liquidity is taken, my down liquidity would then become the CRT 4 hour CRT high, right? So the first half of the day, my short-term down liquidity was this Monday's candle low, this 4-hour CRT low, and then after that my down liquidity would change to be the CRT highlight here. What happened during the first half of the day on Tuesday is that we had a normal protraction profile on the intraday chart, right? And along with that, we had this candle which closed just below this FEG. So when the next candle opened, I waited for it to be purged and I waited for price to test the 4-hour FEG. And after that, I expected lower prices until this Monday's low is taken, right? Which was my short-term down liquidity for the intraday charts. So after this candle was purged, I started looking for a model 1 entry there with my drawn liquidity or target being this Monday's low or this 4-hour CRT low. That was my thought process, right? Now let's go down to the 15-minute time frame and see what we got there. So on the 15 minute, you can see that for the first half of the day, price did not do anything significant at all and just range and formed this CRT candle on the 4-hour below the 4-hour FEG. So what I did is I waited for this candle to be purged during a key time, which was the London Open, and I waited to see and entered a normal protection profile, which is that basically I waited for a manipulation profile above this whole Asian session in CBDR range. And after that, I waited for a model 1 entry to target this CRT low. You can see that here we had this manipulation profile and the manipulation profile and with the manipulation profile we tested a higher time frame key level, and then that manipulation profile ended once we closed below this candle which had purged the CRT, and after that the only outcome for price is to expand lower, right? So I expect the price to then expand lower towards our short-term down liquidity, which is this low, right? So what happened is that after this model entry was formed, I put my entry at the order blocks open with my stop loss above the order blocks high, and I targeted this short-term down liquidity which offered around 1 to 3 year, right? And you can see price expanded lower towards the short-term down liquidity and took out that low, and after that it had a reversal profile from there. You can see that was my trade on NQ.